On the business desk at this hour, we start with the BankservAfrica Take-home Pay Index, which has decreased for a third consecutive month in May. According to the index, which analyzes around 3.8 million South African income earners, the average take-home pay fell to 17,296 rand from the previous month's level of 17,532 rand. This is much greater than the 15,903 rand recorded in May of 2024. The current trend reflects the impact of a depressed economic climate with stagnating growth and a deteriorating global outlook fueled by increased volatility in the Middle East. Global and local economic forecasts have also dampened confidence and have slowed investment decisions as both investors and households reduce spending. These developments could make it harder for workers to find jobs and make money in the coming months. Independent economist Elize Kruger speaks to us now about this reading. Thank you so much for your time, Elize. Given the contributing factors noted this time around, is this what the market had expected?
Tumisang, yes, I think if we can just look at the job stats out recently to see, reduction in employment numbers and, given the constrained economic environment, it's therefore not really a surprise to see that salaries are also starting to get under pressure. So I think we are talking here about an economic environment that is quite a bit more depressed than what we hoped for at the beginning of the year.
Absolutely depressed is what we are feeling, but overall, what picture of the current state of the economy does the reading paint, as well as that of a consumer that has been struggling for quite some time?
Yes, indeed. I think, if I just look at 2025 so far, it's been a year really of a lot of volatility with global shocks. We've got our local challenges still ongoing. We've had a sort of significant cut in growth prospects for 2025. So all of those are, I think, contributing towards a sort of low confidence narrative that's playing out. Low confidence and uncertain environment really plays into a scenario where companies would rather be conservative in the sense of appointing people, and also conservative in the cost side, so therefore conservative on salary increases. And that, I think, is going to be the narrative as we go forward.
That said, what is then the near-term outlook, especially because the global and domestic economic challenges are not expected to abate anytime soon, and of course wage negotiations must happen in the new year?
Yes, I think, a couple of tailwinds could contribute towards, some form of support in this year. But overall, I think we're going to see the rest of the year also being a bit pressurized on the jobs front. If you look at inflation, where we are standing now, it's still quite low. And from that point of view, one could say that most of salary earners will have a real increase in salary, i.e. a salary increase above, say, an average headline CPI of about 3.6%. But, looking forward, that will be a more constrained scenario as we see inflation rising. And what's happened, in the Middle East now has now resulted in us expecting quite a bit of an increase in our fuel prices next month. So that will start to add, to the inflation story. That will be another, constraint on household budgets. And, therefore, even if you do get that salary increase, you will still feel that it's quite a difficult economic environment to operate in.
As we wrap up, we saw a little bit of reprieve in the interest rate going down, but can we cross fingers and hope for more monetary policy easing, at least as one side of the coin that says South African consumers will have a little less to worry about?
I do think there's still scope, Tumisang, for a further cut in interest rates, but I think we will have to see the outside and the global environment to be quite stable for the Reserve Bank to take that further decision to cut rates. And, if I look at the past week, if we have any form of this type of volatility in the oil price and in global sort of developments, I think the bank would be conservative and perhaps decide to sit on their hands. But therefore, quite, I would say, data dependent as we move into July. If we do have a stable environment and the oil price could remain below 70 and even drop a bit further, the rand is still as strong as it's currently, then there could be a scenario that we can see that cut coming through in July.
Thank you, as always, for your contribution. Independent economist Elize Kruger speaking to us about the latest take-home pay index by BankServ.